How's it if you run a tech startup in Cape Town, a retail shop in Johannesburg, or any small business across South Africa? This one's for you. Quick, clear, no jargon. Let's break down the wins, the risks, and what to do next with the 2026 budget speech. The 2026 budget has been called a fiscal turning point, but what does that mean for everyday entrepreneurs? Today, we'll cut through the numbers and give you a practical playbook, where the budget eases pressure, where costs could bite, and which infrastructure promises might actually help your bottom line, and the exact moves you can make this quarter to protect cash flow and find opportunities. Tax relief for small businesses and personal finances. Income tax brackets and rebates are adjusted for inflation, preventing bracket creep. Entrepreneurs drawing salaries keep more of their earnings, improving cash flow and household stability. Compliance and thresholds for micro and small enterprises. The compulsory value-added tax registration threshold increases to 2.3 million rand. This reduces admin and compliance costs for small businesses, allowing them to grow before facing heavier regulatory burdens. Reinvestment opportunities. Higher tax-free savings and retirement contribution limits help entrepreneurs build stronger personal financial buffers, reducing risk during tough business cycles. Capital gains tax exclusions for small business owners over 55 increase. Structural reforms and infrastructure boost. Over 1 trillion rand allocated to energy, transport and water. If implemented effectively, this could reduce downtime, improve logistics and lower operational disruptions. Funding for small business development and employment incentives remains in place, reducing the cost and risk of expanding your team and encouraging employment, especially in certain sectors. Let's get you funded. Time for the cons. Rising costs. Fuel levies, excise duties, and carbon tax increases raise input costs, squeezing margins, especially in transport, manufacturing, and hospitality. Slow economic growth. Projected growth of around 1.6% means cautious consumers, limited market expansion, municipality failure, and mild disease outbreak. Yikes. Austerity and demand pressure. Government spending is tight due to high debt costs. Although grants rise slightly, real per-person spending falls, squeezing low-income consumers and potentially reducing demand. If growth weakens, future tax pressure remains a risk. Compliance. Regulations aren't getting lighter. Illicit trade distorts competition, new global tax rules add complexity, and compliance costs, like the skills levy, are still harming payroll. So, where does that leave us? The 2026 budget is not radical. It's stabilizing. It gives relief and avoids shock tax increases. It's a start, but it doesn't magically fix economic problems. For entrepreneurs like you and I, this means one thing. You cannot rely on the budget to create your growth. You use the relief where available. Higher value-added tax thresholds, tax bracket adjustments, and hiring incentives. But you still plan conservatively. At SME.tax, we do more than just assist clients with understanding the budget and maximizing their finances. We are your one-stop SME shop, assisting with everything from accounting, business management, BE, consulting, company registration, to payroll and mentoring. For more information, please visit our website or give us a call. Cheers!